Hey everyone, welcome back to The Wealth Wire. If you're new here, this is the channel where we simplify personal finance and investing to help you build your wealth. And in today's video, we're diving into one of the most common questions. Should you invest in stocks, mutual funds, or bonds? Let's break it down. Definitions, comparisons, and how to choose the right one for you in 2025. By the end of this video, you'll know exactly where to start. First, let's start with the basics. Stocks are pieces of ownership in a company. When you buy a stock, you're essentially owning a small part of the business, which can grow or shrink in value based on how well the company performs. For example, if you buy one share of Techco and the company grows, so does the value of your investment. Mutual funds pool money from multiple investors and invest in a variety of assets like stocks, bonds, or both. Think of it like a group project where a professional fund manager decides where to invest for everyone. For instance, instead of buying stocks of individual companies, you could invest in a mutual fund that owns shares in 50 companies. Bonds are loans that you give to a company or the government. In return, they promise to pay you back with interest over time. For example, if you lend 1,000 rupees to the government through a bond, you'll earn interest until they repay you. Now, let's compare these options with a relatable example. Meet Rahul and Priya. Rahul is in his 20s and has a high-risk appetite. He invests in stocks because he's okay with short-term ups and downs for the potential of high long-term growth. For instance, he bought stocks of a renewable energy company, and after 2 years, his investment grew by 30%. Priya, on the other hand, is in her late 30s and prefers stability. She invests in bonds because they give her a steady return without much risk. She buys a government bond that pays her 6% interest annually. Now, both Rahul and Priya also invest in mutual funds. Why? Because it's a great way to diversify and reduce risk. They leave the hard work of picking individual investments to the experts. So, how do you decide which is right for your goals in 2025? Here's a simple guide. 1. For long-term growth. If you're young and can handle some risk, stocks are a great option to build wealth. 2. For diversification and convenience. Mutual funds are ideal for beginners or anyone who doesn't want to spend time picking individual investments. 3. For safety and steady returns. Bonds work well if you want to preserve your money and earn predictable income. Remember, it's not about choosing just one. A balanced portfolio often includes a mix of these investments based on your risk tolerance, time horizon, and financial goals. In 2025, the financial landscape is evolving, and the opportunities to grow your wealth are bigger than ever. By investing consistently, even with a small amount, you can take advantage of compound growth. Imagine starting with just 500 rupees a month in a mutual fund or a stock index fund. By the end of the year, you'll have not only saved 6,000 rupees, but also earned returns on it. The earlier you start, the faster your money grows. Remember, it's not about timing the market, it's about time in the market. Start small, but stay consistent. That's the secret to growing wealth in 2025. Now that you know where to invest, what's next? I've got the perfect video for you, how to start investing with just 100 rupees. I'll walk you through how to begin, no matter your budget. Click right here to watch that video now. And before you go, don't forget to like, subscribe, and hit that notification bell so you don't miss out on more simple tips to grow your wealth. Thanks for watching The Wealth Wire. See you in the next video.